everyone. Hope you can see me very well. My name is Ngozi. Sorry, that's my daughter. My name is Ngozika. Welcome to my class today. This is the part 2 of our class. We've already started this class in the previous class. In my previous video, if you've not watched it, please check it out. So you know to watch the previous class. That was a part 1 of our class. This is my beautiful daughter. She likes to be part of everything that I do, so we are together everywhere. So we'll be taking you classes today, and she's also talking. If you can hear her, please bear with us. Alright, today we're talking about accounting. Definition of accounting. Let me introduce myself. I'm an accountant. I've been teaching accounting for quite a period of time, a period of years, particularly financial accounting. Part 1, sorry, foundation class for accounting. That's what I've been teaching. I can also teach account, normal accounts for secondary school. Just in case you need my services, please holla at me. Send me a DM on 07084551965. She's excited to be with you. Let's jump right into our class. Now, what's accounting? Accounting is the systematic process. It might sound a bit long, but just try and be with me. You understand what I'm trying to say? Accounting is a systematic process of identifying, and first of all, identify the transaction, recording that transaction, measuring that transaction, verifying that transaction, then you classify the transaction, then you summarize the transaction. Be with me, don't go anywhere. Then you interpret the transaction, and then you communicate the information to the users of financial information. Let me break it down. But let me use an acronym for the main thing we talked about. We said the system of identifying the transaction, recording the transaction, measuring the transaction, then classifying the transaction, verifying the transaction, summarizing the transaction, interpreting the transaction, and then final communication. IRNCVSIC. So this is for us to identify. This is for you to record. This is for you to measure. This is for you to classify. That is also writing. This is for you to verify. This is for you to summarize. Just be with me. It's not boring. Just hold on. I'll make it a lot more easier. So just stick with me. Interpreting and then communicating. Now, I want to cite an example to make it easier for us. Just for instance, if you want to cook rice, for instance, cooking rice, as simple as cooking rice is, it has a procedure. And if you don't follow that procedure, you won't cook your rice rightly. It might come out too salty, it might come out not properly cooked. But if you follow the system of cooking rice, you will get your rice to come out very good. Same with accounting. There is a system, there's a step-by-step process that you should follow for you to do accounting properly. So you just don't jump in. There's a procedure. That is why it says it's a systematic process. There's a process. There's a system, So the number one thing you have to do is identify the transaction. Just like when you want to cook your rice, for instance, first of all, you get your bowl, you get the rice, you've cleaned the rice, you stone it, make sure there are no stones in them, you wash it, then you boil it the first time, then wash off that water, wash off the sand, wash off the brownness, then parboil it the second time, then add little salt, then your rice will be good to go. If you don't follow this process, if you skip any of this process, your rice will not come out properly. If for instance you just get the rice, you don't clean it, you just pour water, put it on fire and wait for it to cook, will it come out well? No, it won't. So that's the same thing with accounting. Accounting is something that requires a lot of carefulness, and that is why this is the process I'm talking about, must be followed. So if, for instance, Mr. Gozie bought, say, you sell food items, alright, maybe you sell biscuits or provision, and then Gozie comes to your store and buy some provisions from you. Gozie goes out, he pays you 10 naira and goes out. He has bought, let me say, biscuits. What? Okay, let's play bigger. Let's say you sell cement. Gozie comes to you and says, give me 10 bags of cement. Each bag of cement maybe costs 9,000 naira. So 9 times 10 will give us what? 90. Okay? So we have 90 bags of cement. That's the quantity of what he purchased. And we see that one bag costs 9,000 naira. So 9,000 naira times 10,000 naira. Sorry, times 10 bags. That will give us 90,000 naira. Now, if you want to record this transaction, I'll just explain what these processes are. I have to first of all identify the transaction I want to record. I want to record what the purchase of, the sales of what? Cement that I did. To who? To Gozie. Let's say I made the sales on the 1st of February 2025. That is that I made sales. Who is the customer? Gozie is the customer. That's our customer. Once we record this transaction, I first of all identify the transaction. So I've identified what that I made sales. To who? To Gozie. Record it. I'm going to record it. Okay. How many cement bags did I sell? 10. That is where the measuring comes in. You have to measure. Is it 1? Is it 2? Is it 3? Because that's to be very, very accurate. So you just don't record it, just do it properly. That is why you have this process. You don't make what mistake. You record it properly. So for accuracy, you follow this process. Like I was saying, you sold how many bags? 10 bags. That's the measurements you're doing. How many is a bag? How much does a bag cost? A bag costs what? 9,000 naira. So that will be 9 times 10. Sorry, 9,000 times 10. I'll give us 90,000. You have been able to measure it is 10 bags. And the total amount is what? 90,000 naira. Now classify. Now under accounting, you just don't record anywhere. There are several books you have to record. We'll get to books of accounting, but for people like that, I'll talk about the book we're going to use to record this class, this transaction. We're going to use our sales, let's say sales day book. We're recording the transaction first of all. So I'm going to record the transaction. We're under my sales day book. That is the classification. That is where I'm going to record this transaction. Sales day book. Okay. So I will come here and write the customer's name. Customer is who? Customer is Gozie. Okay. So customer is Gozie. Gozie is my customer. Okay. Gozie is my customer. The amount is what? 90,000 naira. So because it's sales, we're going to record it on the right hand side. For sales transaction and credit transaction, they are recorded on the credit side of your ledger. We'll get to that, but I'm going to just explain this whole process to us. So I'll come here and write my date, 1st February 2025. I'm going to write the customer's name. So that's the customer, sales. Okay, so customer is Gozie. Yeah, so I'll just write Gozie, or I can write customer. Let me just write Gozie. Gozie is the customer's name. Normally there should be a date. I'm supposed to classify this, to do this journal properly. There's supposed to be my date. And I write this properly. I'm supposed to have my date here. My date, particulars, yeah. Date, particulars. Let me make this a bit higher. dates, particulars. Yeah. Now, under this particular, I'm supposed to describe that it is 10 bags of cement, 10 bags at 9,000 for one. Sorry, the space is small. And I now have my amount. Naira. You must put the sign, the symbol of your naira. And that will give me what? 90,000 naira. So that's what it means by classifying. This transaction is a sales transaction. Okay, let me just call this sales account, not sales debit. But account and debit are two different things. But let me sales account of my the way I SMI it already. Okay, so that is the classification. Now verify, because you don't want to make mistake. You would go back to your book. When you make sales, you must have written this in your customers when you usually receive when you make sales. So in that receipt booklet, you should go there and double check. Okay, yes, this transaction took place on the 1st of February. Who bought? Who did I sell? Okay, sold to Gozi. How many? 10 bags. You must verify. This is just to prevent error, because sometimes if you make errors, not all the time, accounting requires carefulness. If you make error any place, it's going to affect the whole transaction. So that's why I must verify that yes, transaction date is correct, amount is correct, the customer's name is correct. Okay, then summarize. Now, when you write this your sales, at the end of the month, for instance, you're supposed to transfer this. Like I said, it was our sales day. No, even I made it to be sales account, but I should have used my sales day because you record your daily sales in your sales day. So now, if I have this sales, let's go back to sales day. So this itemization is not the correct thing, but for virtue of this, the purpose of this explanation, let's just get on with this for now. Let's do that. Not very. So it is my sales account now. Okay. Now, besides the sales, by the 2nd of February, I must have been under sales. So let's say I want to give now from 1st of February to the end of February, I must have recorded all the sales I made in my sales day book. I will now transfer the total amount of money of sales that I made into the sales account. Because I already itemized this, I already itemized this item at least. That is why I want us to stick to this. It's supposed to be in your sales day book first of all. You're not transferring to your sales account. So let's assume this is my sales account. Okay? I record everything 1, 2, 3, 4 up to let's say 30th of February has 29 days. Okay, some days 29, some days 30th. Okay, so if the 29th I recorded all the sales I made up 29, and let's say the total amount of money at the end of the day, let's say I have 500,000. Okay, it's the total worth of sales that I've made for that month. I would transfer this to my sales ledger. Even though this is an account, I'll transfer this transaction to my sales ledger. Okay, now in that sales ledger, I will just have for the month of February 500,000 naira. I've been able to summarize this whole transaction from the beginning of February to the last day of February. I'll transfer the transaction to my sales ledger. You know it's supposed to be sales day book actually. So that's the summarizing. So when you write a transaction, what has happened daily, at the end of the year, so at the end of the month, you have to transfer that transaction to another book, which is your main ledger account, your main sales ledger, which is the main sales ledger account. Do you understand? So that is the summary. And then it doesn't just end there. So even when you have transferred to your sales ledger account, a time will come you need to prepare account, let's say for the year or half of the month. Okay, you will take all those transactions that have been summarized in your sales account. That is where you will see the summary of what has happened every month. So that is why you hear the word summarizing, because account doesn't just end in writing what has happened daily. A time will come you want to prepare a report of what happened for a particular period, maybe 6 months, maybe 1 year. So you must have added up all that happened daily and now give us one figure. That is the summary. So my summary, I now have 500,000 naira as my summary. Okay. I'm with you, Mama. I didn't go anywhere. Okay. So then interpret. Now, a layman looking at your book with just 500,000 naira, you might not understand what 500,000 naira mean. It is left for you, the accountant, to interpret that is the total sales that has occurred for the month of February. So that is where interpretation comes into play. Okay, so you have to interpret to the layman that this is the total sales I've made that were made for the month of February. That is the interpretation. If you just put sales 500,000 naira, they wouldn't know is it for 1 year, for 2 months, you know. So you must interpret what you have done. You must explain what you have done. That's what interpretation means. Explaining what you have done, and then you have to communicate that information. You have to tell the person either via mail. Most times people have board meetings, so there will be a meeting during which we now communicate what has transpired. So these are the processes that is involved in accounting. It's not just recording financial transaction. There's a systematic process you have to follow so that you avoid errors. Any questions? If you did, leave it in the comment section. So that is that for our definition of accounting. Okay, now the next thing we have today, which I want to talk about, is the purpose of accounting. Why do you need to record your accounting transaction? Why do I have to be careful? You know, why do I have to go through all this stress of writing my sales, for instance, that happen daily and keeping record? What is the reason behind having an accountant in the organization? Why do I even need an accountant? Now, the reason why you need an accountant in your organization, and the reason why you must account for all that happens in your office, sorry, in the business, is for number one, for record purpose. For what? For record purpose. Okay? If you don't have a record of what you are doing, how can you determine whether you're making progress or not? There must be a record. It is that record you will look at and say, okay, yes, I made a sales of say 5 million naira, and I bought this item. I'm making sales of 5 million naira. I bought it how much? Maybe 2 million naira. Okay, so I'm making a profit. Okay, so if you don't have a record, you cannot account for what you're doing. You cannot just say anything from the thin air. There must be a record. Do you understand? It will guide so that you're sure that yes, am I making profit? Am not making profit? So number one purpose of having an accountant, or number one purpose of having accounting, why you as a businessman must record your transaction, is for record purpose. If you have a recorder, you will know, okay, yes, so I bought say 10 bags, let's use cement. I bought 100 bags of cement. Okay, I've sold how many? I've sold 50. How many do I have left? 50. This will it be enough for me for the next 1 month? Or do I call my supplier to supply me? If you don't have a record, how do you know what's happening in your business? You must keep record. This is very, very essential so that you can monitor the progress of your business. Okay? I need to forget about this cement. If I have no record for it, I will not know. My sales leader can even be stealing my cement bag. I won't even know. Why? Because there's no record. So now to avoid theft and so many losses, it's good to keep record so that you will check if what you now have in your book is not corresponding with what you can count in your office or in your shop. Okay, it's either I made a mistake while recording, or somebody is taking or stealing from me. You begin to investigate to find out why is what I'm having in my book not corresponding with what I'm supposed to have physically. So that is the reason why you must um record. Okay, I must have accounting so I can record purpose. Number two is for you to ascertain your performance. Okay, to ascertain your performance. Okay, when I say performance, it means profit. Am I making profit in this business, or am I making losses? Okay, you would know. Okay, like I said earlier, I made sales worth 5 million naira. That is sales that I made. And this item that makes sales, how much did it cost me to purchase maybe the raw material? Maybe the raw material cost me 2 million naira. Maybe I did add VAT of say 10,000 naira. So I have like point zero, it's like 0.001, I think. Yeah. Okay. So by the time I deduct my sales from my cost, okay, when I deduct these two, I will now know how much profit I'm making. 5 minus 2 give us what? 3. 3 million minus 10,000 naira. Okay, let's assume it's 500,000 naira to make calculation a lot more easier. Okay, so I'm left with 2.5 million naira. So I can say yes, I'm making a profit of what? 2.5 million naira. If I don't have this record, I cannot know that I'm making profit or loss. Most people just assume they are making profit without recording. I bought this thing 10,000 naira. Okay, I bought extra material to repackage the product 2,000 naira. What is my cost? Total cost is not just 2,000 naira. Sorry, let's say I bought, I think, 5,000 naira, and it cost me 2,000 naira to repackage it, maybe nylon and other branding. So 2 plus 5 will give us was 7. If you're selling, you sell your products more than 7,000 naira, so I can make profit. If you say it as 5,000 naira or 6,000 naira, you've not made profit because you've not had the cost of that packaging bag or branding cost. So this is why you must keep record of your transaction. You can actually say, okay, am I making profit or am I making loss? Hope you're learning something. If you're learning something, please give this video a thumbs, give this video a like, alright, and also share to others. And you're also helping yourself. Okay? Alright, let's continue. Now another reason why you must have accounting, or rather you must keep record of your transaction, is another reason why we keep record of our transaction is for us to determine the financial position of the business. When I say financial position, I mean I want to know, okay, how much assets do I have? Okay? To enable you determine the financial position of the business. Financial position. Position of the business. If I'm writing here, financial position of the business. When I say financial position, I want to determine, okay, how much assets do I have? We'll get on to explaining what an asset is. How much liabilities am I owing? And what is my equity? It's always good for you as a business owner to know how much assets do you have. Okay? Assets are the resources that you have. But we'll explain that further in our future classes as time progresses. While liabilities are the debts that you owe. Most times people borrow money from the bank to start their businesses. While capital is the amount of money you yourself have to start that business. So you should know how much at every point. How much assets do I have? How much am I owing? And what amount that I contribute to the business? What is my own that I contributed to you must know every time. Because if you're not keeping checks of all these things in your business, you would not know when something will begin to miss. And that is why in accounting, you always provide reports. Sometimes reports are provided every 6 months, depending on what the management wants. Sometimes it's yearly. But the important thing is that there must be a record where you go and check. Because you invested money, you want to make profit. You're not just doing charity, except maybe you're an NGO. And even if you're an NGO, people that gave you that money to start that, they want to know whether that money is being used for what's supposed to be used for. If someone give you 10 million naira, for instance, and you don't give account to that person, do you think you go back the next time and tell that person, Oga, please, I need extra 5 million naira? The person will ask you first of all, that one I gave you, what have you used it for? Let me see what you have used it for. Tell me what and what have you purchased? Are they spoiling? Do you understand? So this accounting is very, very important. It enables you to give account of everything you have, and because you're to give account, you'll be more careful. You won't just spend money anyhow or squander anyhow or spoil your office equipment because you're supposed to keep a record of it. Okay? So another reason why you must have accounting is enables you to know your cash flow. Cash flow is just how money comes into the office and goes out. It's good you know. So that let's say somebody is using cash to buy something that is not meaningful to the business. You will see it. And then you caution that person, don't use the money for buying bottle of wine. This business is not for entertainment, for instance. So these are the reasons why you must have accounting. Okay, those are the purpose of accounting. And with all of this information, the management will see, okay, yes, this business is doing well, or this business is not doing well. We need to make improvements, or we need to do one or two things to make it better. You would know it because you have a record. You don't have a record, what can you use as a basis of saying what you're saying when you get that information? So accounting gives you what? Information, so that you can make what? Decision. Because management wants to know what is happening in their business. You cannot carry everything in your head, but you must write it down in a book. And with that, management will see, okay, yeah, so this is where we need improvement. Okay, this and this. Okay, you understand? So these are the reasons why you need accounting. Now the next thing we have is the branches of accounting. There are several types of accounting. Several. There are numerous, but I'll just mention a few. Okay, then I'll explain what the different branches does. For this video, I don't want it to be very, very long. I want it to be a very short video. Okay, so we have a branch known as financial accounting, which is what I'm teaching. Okay, then we have forensic accounting. Forensic accounting is about accounting that tries to investigate. Most time when there are issue of fraud and embezzlement, you will need a forensic accountant. You would find out, there's a different kind of accounting. Why is there embezzlement? We investigate like FBI. Okay, then you have government accounting. Yes, government accounting. The accountant that is accounting method that is used when you have all these ministries. The way private organizations prepare their accounts is very, very different from the way that those in ministries prepare their account. So this account is called government accounting. Then you also have cost accounting. Cost accounting is accounting that basically looking at the cost. That account is focused on cost. How do you reduce cost? Everything has to do with cost. That accounting is that is their purpose. The aim is just to help minimize cost. So you need a specialist in that area. Now find ways to minimize cost. That is what that account is about. Then we have auditing. Auditing is another branch. Okay, they ensure that okay, this accountant is doing things where it's supposed to be. Like now, for instance, let me say CBN is a regulatory body that governs what bank does. Okay, so auditing is a branch of accounting that supervises or comes to look at what the accountant has done. Is it in line with the standard? Are there errors? And there's different kind of audits. You have internal and external, but that's another topic for another day. Okay, then we have tax. Yes, tax is also a branch of accounting. After you've made your profit, you're supposed to pay company income. There are several types of taxes. Okay, it's also a branch under accounting. Okay, it's for the government. They work for the government. Then we have performance management. Okay, performance management. We have financial management. Then we have bookkeeping. Financial management. Then we have bookkeeping. All these are branches of accounting. So it's left for you when you qualify. So okay, which one do I think I want to specialize in? Forensic, government, financial accounting. We also have management accounting. Yes, management accounting. So all these accounting are the different kinds of accounting, and there are different things they look at. Accounting is very broad. So these are the branches of accounting. Okay, so my time is almost up. I hope we have learned a thing or two. Okay, if you have, don't forget to give this video a thumbs up. You know, the more thumbs up you give it, the more my account will continue to grow, and people will know, okay, there is this wonderful accounting lecturer. You know, I think I should go and watch her video so that I can pass my ICANN. For those in ICANN, or if you're in secondary school, I can learn accounting well. Okay, or if I have a small business, I can keep record of my business transaction. You know, so share this video. If you've liked and like it, if you've learned something, don't forget to send me a message. If you have any question, send me a message. This is my WhatsApp number. Okay, just send a message. Don't call too much. Some people can disturb for air for. Some people can disturb for call. Just send a message, okay?